Hi, Warriors. Dale Pinkert here at TradeGATEHub. We are powered and sponsored by TradeView Markets. When I left you on Monday, was talking about that the euro became the preferred short. We tried to make a new high in the euro, failed to do so, but here I want to talk about gold. So I talked about the negative divergence that we had here on Monday. You had a nice little break, but notice this 50-day, and this is on the 4-hour TF. So look how it held these pin bars here. And then we made a new high. If you're in our main chat, I sold it yesterday at 1938. We had a big break. I took 17 bucks out of it. I'm still short from 38 with a partial, and we're on the verge of taking out this 50 MA on the 4-hour TF. I think what's going to be behind the break, besides perhaps the dollar, is I really like this formation developing in US dollar yen. You have an ascending bottom, you have a flat top. It's an ascending triangle, which implies, just like a descending triangle at the top, implies a bottoming formation developing, breaking out over 131. You just do the arithmetic, call it 27 to 31. It's going to give you 135, which is this resistance level, which should take yields back up. And with that occurring, I think it's only going to add to downside pressure in the gold. And as you can see, gold is almost as weak as silver is today. And you guys know I'm still thinking 22.5, although the blue line special is starting to come in more like 21. So let's look at this confluence here in the silver at 21 with the 200-day moving and the speed line. So that's the call on silver, still viable. And gold, once we take out this 1920 level, which you could see it's still trying to hold, we have some support here at 1885, which is a throwover line. And this is what I mean by a throwover line. It was a wedge that we broke out above, and sometimes it can act as support. But when I look at it, to me, what's going to be more important is going to be the 200, which also will have confluence. Let me look at this. It's going to have confluence with an uptrend line. If I extend the wedges, see where this comes in. This is live analysis. Let's see if we could get it. No, that's not going to do it. So remove that. See if it'll give me the, yeah, here we go. So, okay, that's going to come in around 1850. So you're going to have some confluence at that 1840 level, along with this bottom of the wedge line at 1850. So 1850, 1840, initial objectives, a lot of confluence here. Look at that. So on the 4-hour, it's right there with the 200 with the uptrend line. So this to me looks like a nice objective. In gold, the Aussie did not work for me. Also, they came in with some very sticky inflation. So it's making new highs without the euro and without cable. So cable's trying to hold and rally, hasn't done much. As long as we trade under 23.5 or so, we're still open. I'm still open to lower levels. And in fact, when you look at the euro, it has a little bit more of a negative look. When I look at EG, it's up a little bit today, but this could be a failing rally that we have up here around the 88.5 level, and we could be selling off here, which is going to make euro the preferred short over the pound, but I think they both could be vulnerable. And two comments. First of all, the S&P is under tremendous pressure after the conference call in Microsoft. I'm not ready to get bearish here yet. We're back under the breakout line, but I see on certain time frames that it must have been on a 2. Yeah, that, you know, we confirmed highs up here. So it's still possible we get another high into the end of the month. I was thinking that we could get back towards this line I talked about it with Mike yesterday. That's all the way up here at 42, 4,300. We'll see. Again, the 39.50 is the pivot level there. And I'll wrap it with WTI. Took a short yesterday in WTI. It worked. It was up in here and took some partial profits, trying to hold right now. But here's the bigger picture. When I look at the daily, although we're trying to hold here, that back at the lows, we had confirmed lows on the daily. And then we held this. This was actually a buy I put out on a retest of the breakout of the downtrend line. And if we start taking out this 78 level, you have to be open to the fact that crude might sell off and take out 70 and head towards 60 bucks. High conviction trade, still short side of gold, and waiting for a breakout in US dollar yen. That's still 100 pips above where we are now to have this ascending triangle. And the dollar keeps getting turned back at 102. So over 102, the squeeze could occur to take us up towards 103.5, and then higher levels, 105, 106. Those are my calls. The next one's yours. I invite you to join us here at TradeGATEHub, and also invite you to check out TradeView Markets and compare their spreads to your broker. Again, gold on the verge, hasn't done it yet. Here's your 4-hour, 50-day moving average. It's trying to hold it. But if I'm right about the yen, you're going to see lower gold prices, and you'll see yields beginning to rise again, which they've been heading lower for, a few weeks now. Okay, so perhaps we're putting in a right shoulder here. That's interesting. Just notice it on the 10-year. You could call this a left shoulder. You could call this a head, and we're developing a right shoulder here. So if we do that, the neckline is going to be about 360. So that could take us back to about 390, and could pressure gold and be supportive of the dollar should that manifest. So that's a wrap for today. I'll be back with Mike tomorrow.